Hello traders, today is April 10th. My name is Michael Boutros, currency strategist with Daily FX, here to cover the euro dollar. Looking at the charts, guys, on the daily, we did break through this week the weekly and monthly opening range highs, giving us a topside bias. Remember this level, I'll draw your attention real quick to 138 to 138.30, level we've been watching for months and months and months, an extension that dates back to the lows we put back in July of 2013, and it's also a 618 retracement dating back to the 2011 highs. Okay, it comes in at 138.30. So this entire region has been riddled with reversals, breakthroughs, and the like. I'll also bring your attention to this trend line here that dates back to 2008 highs. We designated this as a false break last month. Looks like we're making another attempt here. This is what the scalp chart looks like near term. Here was the weekly open. You saw a clear opening range break with the move above 137.50, giving us that topside bias. I'm not really partial. I'm playing the euro dollar between 138 and 138.30 because of the reasons we noted earlier. So I'm standing pat through that region. But once we pop back above 138.30, the levels have played out pretty well. So near-term resistance is 139. A couple of things to note. We've had some ongoing RSI divergence throughout the course of the week, with price action continuing to press into new, fresh highs as the oscillator made lower highs. Does suggest that near term this might be a little bit stretched. Another thing I'd point out real quick, guys, if we go back to the daily chart, the last time we saw 4-day rallies, the last 4 times out of 4, the market did see at least a little bit of a pause or a pullback before we continue. So our immediate focus heading into the end of the week is against 138.90. Not really taking a short position against it. We'll look to see what the opening range looks like next week on the Sunday open, looking for pullbacks to offer long exposure as long as we stay above 138.30. So the bias remains weighted to the upside above 138.30. Break below 138 would be the only thing that would shift our bias back to the downside. If you scroll to the bottom of the report, you will see the key threshold grid mapping out the scalp levels that we're looking at here. Do keep in mind tomorrow morning we do have the University of Michigan confidence surveys, which could shift around dollar pairs. Keep in mind the dollar index also coming to key support somewhere around 10,393. Again, we'll want to see that continue to trade heavy for us to maintain the upside bias here. Look for some pullback here late this week, early next week to offer some buying opportunities. Again, keeping our focus on the upside above 138.30. Till Monday, guys, have a great weekend, and we will see you then.